Malachy McClelland, anti-money-laundering remediation program guru, and me, Adam Samuel, here talking about anti-money laundering issues, and today in particular about risk rating. What do we mean by risk rating in this context?
Hello, Adam. Well, there's a requirement around to use a risk-based approach for firms, regulated firms. And the idea is that you risk rate your clients so you know what level of client due diligence and what information you need on each customer, what amount of information you need on each customer, and what risk each customer group will present to the firm.
Is this driving the decision as to whether to use customer due diligence or enhanced due diligence, sort of a grade level of scrutiny?
Well, yes, it's one of the things, it's one of the tools that firms use at the outset when onboarding the client to establish what risk that client poses, and from that then to make a decision as to what level of client due diligence is required. And if it's higher risk client, then normally that would involve enhanced due diligence.
So tell me the sort of activities that you have to engage in when you're risk rating a client.
Well, obviously, at the outset, when you onboard a client, you need to obtain the client information. There are know your customer requirements that firms will have. Regulated firms have a duty to know their customer. But the idea as well is to have enough information so you can put that client in a certain risk. Whether the risk rating that the firm uses is not whether it's high, low, or medium, high, medium, or low, for example. And you can some of the questions are around what jurisdiction the client's in, what business the client's in, what products the client will be using, and using this information. Normally, a firm will have some sort of a risk rating tool that they will feed in the information to, and then obtain a risk rating for the customer. It's not prescribed in any way as to what this should look like, this risk rating tool, but that's normally the way it's done. And from that, you would hope to obtain a risk rating.
Now, you do remediation projects. Where does this go wrong? Why does this ever need remediating?
Well, it's not so much remediating projects around risk rating. It's remediating projects very often around client information and client due diligence very often.
But it's the information you collect. So it's the information you collect that can sometimes need cleaning up. It goes into the rating rather than the rating itself.
Well, that's right. If you haven't obtained or maintained sufficient information on the customer, you may not, the risk rating of the client might, as well as the client due diligence information being out of date, the risk rating may not be what it should be. So obtaining the information in a remediation project may involve also changing the risk rating of the client. That's right.
In that sense, a remediation project is almost not a remediation project here. It's actually just an ongoing updating of what may have been a perfectly correct initial rating.
Well, the firms will continuously monitor the clients, not necessarily require remediation. So they'll continually monitor clients, and there are lots of events, trigger events they might call them, that could change the risk rating of a client. For example, the client has moved jurisdiction from a low risk jurisdiction to a high risk jurisdiction, or other events that could cause the changing of the risk rating. The remediation usually comes around because of some wholesale failing around the customer base that the client has to put right, or the firm has to put right, such as insufficient know your customer information.
So finish, does this work? Is risk rating an effective tool for combating money laundering?
Well, yes, I mean, there is a requirement around firms to have a risk-based approach, and one of the benefits of this is it gives you an efficient use of resources, it should do, so that you can know where to concentrate your additional monitoring, and know what informs you as to what level of information you need in each customer, and it informs you as to the risk the firm meets, the risk the firm faces in dealing with each customer.
Thank you very much. Adam
Thank
Samuel,
you.
Malachy McClelland, Talking Money Laundering.